Have you recently wondered about retirement? With lots of opinions about the FIRE movement, which means financial independence, retire early, and the recent stock market volatility, I'm sure the question has crossed the minds of many. Although there are lots of important considerations with retirement, one crucial step toward retirement is easy to understand, but difficult to execute, and that is focus on increasing the gap between your income and your spending. So now let's take a look. According to Zach from the Four Pillar Freedom blog, this chart was created to simplify what increasing your income and limiting your spending and expenses could mean for your retirement prospects. As you can see by this chart here, the chart shows how many years it will take you to hit your level of financial freedom based on your expected income and spending habits. The numbers are based on the assumption that you will achieve a 5% return on your investments and a 4% rate of withdrawal once you reach your financial independence goal. So, as an example, if you earned $40,000 per year of after-tax income, which is shown on the lower horizontal axis, and you spent $30,000 a year, which is shown there on the vertical axis on the left margin, you will have to wait 31.9 years to gain your financial independence. Stated another way, if after expenses you have $10,000 per year to invest and you get a 5% return, it will take 31.9 years before you have enough money to withdraw 4% of your portfolio without running out of money. As another example, if you earned $90,000 per year but only spend $30,000, you only need to work for 10 years to have enough money to support you for the rest of your life. And Zach also stated that if you earn $90,000 per year and are spending $85,000 per year, it will take you over 60 years to retire. So what if your investment returns are as high as 15% per year? Let's take a look at that next chart. So this chart here shows the rate of return based on 15%. And the highly unlikely investment return of 15% may have a lot to do with the increasing popularity of the FIRE program. And we talked about that, which is financial independence, retire early. And it's particularly popular with millennials. But millennials haven't suffered through a bear market. So the whole concept seems a lot more achievable when your portfolio is increasing like it has done for the past 10 years, which is quite well. However, when stocks are declining, as they have been so far this December, the story will likely end differently. Regardless, Zach has created another chart, again, shows you the 15% return and what that would mean for you. So as shown by this chart, an earner waiting almost 32 years to reach financial independence, such as the very first scenario we talked about, would reach that independence in less than 18 years with a 15% rate of return. And as you can imagine, counting on those huge returns going forward is not really a reasonable assumption. And most people focus on limiting their spending. And that's taught by many, including the book The Millionaire Next Door and a lot of other pundits out there. But I assure you, not spending money on coffee every day will only get you so far because cutting costs is limited. That's one part of the equation. The other part of the equation is your income. And in my opinion, focusing on increasing your income is much better because your income is unlimited. So for today, that's ChewDog Charts. Thank you.